Hello and welcome to another MCO market update on Dogecoin. The Doge chart reacted recently to two resistance areas that obviously kept the pressure to the downside high. So we still have high downward pressure and the yellow scenario remains the preferred one. I mean, I'm not saying we have to find a low at 12.6 cents, but the focus is on 12.6 cents as next target. That would still allow for another, let's say, around about 14 to 15% price drop. And the reason why I was favoring this was, first of all, that the rally into resistance here between 16.4 cents and 17.4 cents, this was a three-wave move up from the swing low that formed here on Thursday, the 3rd of April. And the price also reacted to it, obviously. But also the rally before that, even the larger degree rally that happened between the 10th of March and the 26th of March, that was also a three-wave rally, and the price got rejected there at one of the ideal targets. So I can remove that resistance area now. I can remove the channel, remove that resistance area, because we can now add the next one. And also in addition to that, the rally into the resistance area here in circle 4, that was also a three-wave corrective rally. Okay, that's why we're always watching for three-wave movements. Someone asked me earlier today if we really need to wait for 5 waves up for a reversal signal and the break above resistance. And I said yes, because only that is a confirmation that the trend is shifting. So I know people get annoyed by, let's say, this 5-wave stuff and that we need 5 waves up above resistance. But you see what happens if we don't wait for that. Then it's fragile until we get 5 waves. That's essentially what it is. So therefore, no bottom has been called for yet, and rather we're still watching for lower prices. The idea is that wave 5 to the downside, circle 5, should be an ABC structure. A wave done. That was a 5-wave move. B wave done, and we're now in the C wave down, which is wave 1, wave 2, wave 3, wave 4, wave 5. We will then have to see if the price can actually form a low in that region around 12.6 cents. There should be a bounce at least. Even in a more bearish scenario, it could be another wave 4 rally before we go down lower. But for now, the focus is on lower prices, and I wanted to share with you what now the key level is that now needs to be broken to the upside to suggest a lower is in. First of all, lower is still expected. 12.6 is next Fibonacci support. And if this really is a 5th wave, we should see a break below that previous swing low that formed on the 10th of March. And in addition to that, the downside momentum suggests we are in a 3rd wave to the downside. We expected that 3rd wave to the downside, so that strong sell-off shouldn't surprise anybody who watched the previous Doge video. But what we can do as well is, first of all, identify Fibonacci resistance, which is the 50% retracement of the currently unfolding 3rd wave. Now that resistance area will change with the price, but here you see it, as long as the market stays below 15.9 cents, the downside pressure remains high. Also, it doesn't look complete yet, really. And in addition to that, we can also identify targets. So we take the length of the wave 1, we go to the high of the wave 2. And we know that a 3rd wave should get to the 1.38 extension. So we talk about 14 cents at least, yeah. And then here, down there, wave 5, maybe 12.7 cents, 13 cents or so. But this would only be the first ideal target, that 14-cent level. So it takes a break basically above 15.9 cents as a first indication a low is in. Better would be a break above the last swing high at 17.3 cents. That's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.